Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Asian session live market analysis on 23rd of July between 5 and 5:45 GMT. We will review how exactly the market would behave during this last week of the month, 23rd to 27th of July. So there are three components, as I explained many times, that the derived forecast is one, the second is market reading, the third is the trading strategy. Now this is the time that the market is making the extreme moves, so we have to necessarily use the market reading and the trading strategy to limit the risk and maximize the profit. So when you look into that of the currencies, like Euro and USD CHF, they are making extreme moves when compared with that of the normal days. But coming to that of GBP, Australian dollar, you find that they are not making such extreme moves. So ultimately, it is one of the trading strategy or one of the strategies of the players to create the uncertainty and the panic among that of the traders. And as they know very well that predominant of the traders take positions in Euro, and they just made a very big drop in Euro again and again, and that has given that impression that the fall is unstoppable. So let me go back to that of the live market quote page. I will give the link for the live market quote page. Okay, I'll focus the camera over that of the live market quote page. Now you are in a position to see Euro is trading around 1.2115, 1.2117, 1.2134 is the high, 1.2106 is the low, 40 pips negative net change is seen. And if you notice it, then Friday close level 2156, and from there straight away they just opened lower and came down about 30 pips, and from that of the Friday close it is 40 pips down. But when it comes to about 1.2115 or 1.2106, which creates enormous confusion to that of the traders, what could happen to Euro. Then if you carefully watch it, they made similar drop in the case of USD Yen as well. So it is currently trading around 78.19, 78.20, 78.53 was the high and 78.15 is the low. 30 pips negative net change is seen. When Euro and USD Yen make negative net change, we know that it is a contrarian move. As a result, you find Euro Yen has come to about 94.72, 94.75, 95.26 is the low. They opened lower, and from there made further drop to 94.63 and currently trading around 94.71, and about 69 pips negative net change is seen, a cumulative effect of Euro drop as well as USD Yen drop. And in the case of GBP, it is currently trading around 55.78.80, 56.25 is the high, 55.69 is the low, 42 pips negative net change is seen. When compared to that of Euro, GBP has made about 2 pips negative net change, but still it is hovering around on the higher side of 1.55, whereas Euro formed the new low. As a result, you find Euro GBP has come to that level of 0.7776, 7778, 7782 is the high, 7760 is the low, 7 pips negative net change is seen. As I explained that Euro GBP, they wanted to bring it down to 0.77 area, and they have finally achieved it. And then they are expected to make only range bound swings in the case of Euro GBP around 77.50 to 78.50. That range they are expected to make swings, and they are not expected to make big drop or a big rise in that. Now they are expected to take up Euro CHF, which is again hovering around that of with zero net change, 1.201011, 1.2012 is the high, 1.2009 is the low. 3 pip spread is seen between the low and the high, and they are just trying to lift Euro CHF as well as GBP CHF. GBP CHF, you find that it is currently trading around 1.5442, 1.5444, and 1.5482 is the high, 1.5432 is the low. 12 pips positive net change is seen. So they are expected to gain the levels in the case of GBP and also USD CHF. USD CHF already they are just taken it to the 0.99 area. So on Friday, we know that they closed much lower than that of 98, but from there they straight opened higher and then further gained the levels to 99.20 and holding around 99.12, 99.13. So when Euro has made about 40 pips negative net change, CHF has gained only 32 pips negative net change. Because of that, it is hovering around that of 1.20 area. But Euro CHF, they are expected to gain the levels, and also in the case of GBP CHF, they are expected to gain the levels. Why? Specifically in the case of Euro CHF and GBP CHF, because they are the European crosses. So they are handling at the moment the yen crosses, and Euro yen has come to 94 area. From that of 97 area, they have pushed it down further. And in the case of GBP yen, it has come to from 123 area to 121.78, 121.82, 122.58 is the high, 121.68 is the low, 78 pips negative net change is seen. So if you see that the negative net changes in the case of the majors are around 40, 45 maximum, and the highest is Australian dollar about 60 pips. Whereas if you see the crosses, all the crosses excepting Euro, GBP and Euro CHF, they are making more negative net changes and positive net changes. And they are handling to start with for the big beginning, the crosses, and later on they are expected to come to that of the majors. So when they show new level of 1.21 in the case of Euro, obviously we know that people will not be willing to buy and waiting for the gains to take sell positions. So no one in the world will say that it is bullish. So what is next in the card? By dropping it, what is being achieved in the market? So that we need to understand. So by dropping, okay, fine, everybody is willing to sell Euro and nobody wants to hold Euro, but somebody has to buy for the transactions to get completed. Otherwise, if all are sellers, there is no buyer, no transaction will happen in the market. So they are buying and dropping and buying, but it will appear that the drop could be endless with less usable margin or equity. It is very difficult to sustain with Euro long positions, and the only way to hold such positions could be using the hedging orders. And that is why I said the trading strategy is very important when you are focusing on Euro. And with regard to GBP, you find that still it is very comfortable level and not come to 54, 53 area like Euro, which has gone to that of 21 area. GBP should have gone to 52 or 51 area, but it has not done that because they wanted to just hold Euro GBP and get rid of it and just make only range bound swings and try to accumulate other currency crosses and try to earn. And in the stock market, and it is a common practice that the players take a set of stocks and try to rig the stocks and take it up very big, and everybody will be talking very high about those stocks, and afterwards they dump it. And once it is dumped and dropped, and the players may not pick up those stocks again, and instead they will pick up certain other set of stocks and try to rig it. The market might be bullish, but those stocks which have gained already may not gain. This is one of the game plan of the players, so that those who are holding it for a longer time without any strategy, they may not be able to just close the position unless and otherwise they use specific trading strategies to get rid of the losses. So that is an important aspect with regard to trading. So the players try to do that now effectively. And in the case of commodity pairs, you find that USD CAD is trading around 1.015356, 1.0159 is the high, 1.0131 is the low, and 27 pips positive net change is seen. When CHF is making about 34 pips positive net change, USD CAD is only making 27 pips positive net change. As a result, you will find that CHF CAD is expected to make further gains. And Australian dollar, which went up to 1.04 area, and from there it has come to 1.03 area. 1.0366 is the high, 1.0306 is the low. 62 pips negative net change is seen. And as I explained many times, they can do up to 75 pips negative net change, so that there is a scope for reversal. And if they do beyond 75 pips net change, then the reversal scope might be limited for that particular day. So what they are expected to do in the market in coming days. And in tandem with it of that, in the case of the region, one of the currencies is Indian rupees, and USD INR is currently trading around 55.77 with 45 pips positive net change, and Singapore dollar is trading with 45 pips positive net change. So as in see that they are not showing the extreme levels. The regional currencies are not showing the extreme levels. Only the majors are showing the extreme level. In the sequential trend reversals, they are just finish all the extreme levels in the case of regional currencies, and later on they do it with regard to the yen crosses. Then you will come across the commodity pairs, and already they have just done the extreme moves in the case of commodity pairs. Now finally to the majors and the European crosses. Then you will find the market comes to normal conditions, and this time around they are taking several months to bring in that sort of moves, because the players wanted to have the moves with limited resources. Now, with regard to the market trading, I'll explain. Then later on, I'll explain what are the expected market moves using the forecast. And with regard to the trading strategies, we always see that the low is not being breached for more than 30 minutes from the start of the session. We try to take a buy, or we try to take a sell when the high is not breached for more than 30 minutes from the start of the session, and then try to close within the session and still use the hedging order. But sell and buy trade at the lowest level for the season might look risky. And so smart traders or professionals can do that. But small traders, when they do it, when they fail to keep stop at entry and willing to accept loss when they are able to make quick moves, might get caught. So instead, you just wait for the market to settle and see that it sets the direction. Then afterwards, you can enter into that market. And if you are already holding the positions, the best way is hedge and wait. Probably a matter of 1 or 2 days, they should be able to bring in clarity in the market, and they cannot keep the market uncertain for prolonged period. With regard to the initial lows and the highs, 0 formed the low, 1.2106, 1.034, 2134 is the high. They are not breached the high at the low, and they are simply making small swings in that range. And GBP 55.69 and 56.25, they are not breached. And yen 78.53, 78.15 is the low, and 78.53 is the high, and they are not breached. And in the case of CHF, 98.98 is the low and 99.20 is the high. You can see that they are all in a very tight range. And Canadian dollar, 1.0131 and 1.0159 are the levels. And in the case of Australian dollar, 1.030, is the low and 1.0366 is the high, and they just made a quick upward move and then started making the slide, and it is showing about 62 pips negative net change, and currently trading around 1.0316 and not breached the low, even though it is closer to low. Normally, you know that the come up as lead the rally and lag behind. So track it. You will be able to understand what sort of moves are expected to happen in the market. Now, with regard to the expected market moves, it is a fourth week of the month. So then you come across 2 more days, 30th and 31st of this particular month of July, and 1st, 2nd and 3rd of August fall in next month. So whenever you come across a month wherein the current month gets over and the new month starts, market is expected to make very big volatile moves. So the players are preparing for that in order to make a very big moves. And so this is the fourth week of the month. Again, their last week of the month, they are expected to make the volatile moves. So this week and the next week, they are expected to make very quick moves in the market. So small traders may not be able to withstand the pressure. The market will give definitely trading opportunities, but we have to do only swing trades during such volatile times. So week beginning false move may be limited to early Japanese session now, then early US session. Again, during the US session, they are expected to make one more downward move after gaining some level, create the uncertainty, and then try to trap the traders either way. So players normally trap the traders either way. That is, after the rise, if the traders take the sell buy positions and without any hedging order, then they drop and induce them to liquidate. Then when the traders sell that it is breached the resistance and the supports and going below and try to take the sell position, then they gain the levels and trap the traders. So after the drop, we should not sell, and after the rise, we should not buy. If we keep that as a strategy in our trade, then we will be able to really earn from any market conditions. So we have to ultimately observe that or focus that we are doing only intraday trades. And during the last week of the month and the month wherein the week wherein the month gets over and the new month starts, then the market is expected to be very volatile. Again, not good for position trades. So keep that in mind that position trades are to be kept away for about 15 days and try to focus only on swing trades. Try to enter and exit out of the positions as quickly as possible. And market has to make either way moves, and it cannot make continuous fall. It has to make either way moves, and only when a good trading opportunity comes after reading the type of moves, so whether they are making a stop and or an extended move or an intentional move, you have to identify and then try to take the positions. You will be able to really see profit. So volatility is expected to increase towards month end, and so use the hedging to limit the risk if you want to trade, and also see that you are able to keep stop at entry once the position makes profit and trail the stop to protect the profit. In a profit-making position, trail the stop. In loss-making position, use the hedging order so that you'll be able to control your trades. If you fail to control your trades and expect the market to move up or come down and pray to God for that, that may happen or may not happen, but ultimately that is going to increase your pressure and increase your uncertainty, increase the fear, and that may lead to distress trading. So avoid distress trading during such conditions, and ultimately we know that the players want all these currencies and they do not want to eliminate any of the currencies. Already the number of currencies are reduced when the common currency euro has been introduced. So they will not reduce the number of currencies by any chance. So in such a scenario, then they need the traders to take positions in different currencies. But sentimentally, the traders have got the tendency to take positions in euro. That is why The volume in the case of euro is really one-sided. Predominant of the traders trade euro, and the rest of the currencies they just take very few positions or they don't. So in such a scenario, the players have to really bring in big moves in the case of euro in order to earn their money. That is what's happening in the market. So let me minimize the PowerPoint presentation and I'll focus the camera over that of the live market quote page and try to answer to the questions which are asked here. So Sadiq has got a question. Do you think the euro can go below 1.20 and further? See, when you look into the time frame, now it is the fourth week of the month, and also the next week, as I explained that this month gets over, the new month starts, they're expected to make some extreme moves. So I'm not telling that it will definitely go to 1.20, but they are expected to make very big volatile moves. And so be cautious and try to use the hedging order to limit the risk. So again, how do you make a call that a pair is going to reverse? Okay, whenever there is a reversal going to happen, they are expected to make the extended stop it. So a quick downward move and then a quick rise thereafter in a matter of about 1 to 2 hours. And that sort of reversal within the same session indicate that there could be a reversal. Then another factor is when the traders are not at all participating today, they make a quick drop during the start of the session, then hold and slowly gain within the session to that of the high and above, then that is also an indication of a reversal. So always keep in mind that the quick moves are false moves in the market. They quickly drop in order to buy, quickly rise in order to exit out of the positions. But wrongly we call it as drop the bearish condition and the rise the bullish conditions. All the traders become bullish after the rise, but the players are sellers. And all the traders become bearish at the time the players are the buyers. So understand whether developing a mindset of bullish and bearish is going to help us in trading. Then Francisco, do you think that euro can go below 1.20 during the month and wide moves? Yeah, they could do it if they want. And you know that in the past history, when you look into that of the lows, what they set, that is 1.23, they set it and reversed it to 1.26 in 2009. And again they made 1.1918 and then reversed. So always, and in the case of GBP 1.43 and then reversed. And they always make very big extended quick downward stopping to make the reversal. And so that at any level you keep the stop, they will try to hit. If you use the hedging, then they may hedge you, but the hedging will be making profit. You can keep stop at entry and they can reverse and take out your hedging with no profit, no loss. Then they continue to gain quickly upward. And you know, in the case of yen also, they just came down to 76, 75 area that way and then reversed. So always there, and in the case of CHF, we would have seen that they came down to 71, 72 area and then reversed. So all such quick moves are bound to happen in order to make a very big reversals. So they don't silently take up the market. So use the hedging. That is what my humble request is. And Raveman. While euro rising, how much rise will make GBP? They are expected to make gains in the case of GBP more when compared to that of euro in order to maintain euro GBP cross around 0.77. So in 2004-2005, you refer to euro GBP cross and you will be able to understand they used to make an extreme move of 0.76 then come up to 0.78850, then again bring it down. That sort of swings, and predominant of the day 0 GBP was making only 25 pips swing because the pip value is very high. So they used to make only 25 pips up and down move here. That is why many of the traders find that it is the safest cross to take positions, because maximum it can go away from us 25 pips, and if you wait for a few days, we'll be able to book profit. That sort of moves were Euro GBP was doing, and suddenly it went up to 0.98 and came down. At that time, they said that GBP could be merged with Euro and things like that. Now you find that all the hypes what they have created is just forgotten. And similarly, in the case of Euro CHF, they came to parity 1.0054. They came to parity in the case of Euro CHF, and then said that Euro and CHF could be merged. And again, at that time, CHF was considered as the safe haven currency. Now, nobody talks about safe haven in the case of CHF. Whenever there is an uncertainty, we know that either CHF is expected to become strong, or yen has to become strong, gold and silver are expected to become strong. But now if you look at it, you find that only US dollar is becoming stronger and no other currency is becoming stronger. So when you expect something, they show the unexpected. And you know very well that US economy is no way in a better position when compared to that of Europe. Still, they can simply give the attribute that it is the strongest currency, safe haven currency. Since if they use safe haven, then people will laugh at them. So they are just telling risk aversion. So GBP is expected to gain more, and now CHF. So as anticipated, it is coming closer to that of parity. After gaining CHF, and as you see that after 93 area, CHF was not making much of a drop. So it used to make about 50 pips drop and 75 pips gain, 25 pips drop and 75 pips gain. That sort of moves, they have been doing it. Slowly they gain the levels in the case of CHF. In order to create the sentiments, they just dropped it. They found Euro is a handy currency to drop in order to gain levels in the case of CHF. Then after coming to parity and above, you will find Euro going upward by using some other story, and they will simply say that European crisis is resolved, etc. And you will find that Euro GBP jumping up like anything. So they pick up some currency pairs at a given time and crosses at a given time and try to rig. And you know that they rigged the commodity like oil above 100, and like silver, they took it up to 45 area. Now it is currently trading around 27 area. And they took gold to 1900 and now currently trading around 1580. So this is the common practice of the players. So we need to identify what they are trying to do it. Nothing more than that. Becoming bearish and bullish is not going to help. We need to identify which currency pair they are trying to rig and try to participate and go along with them and try to earn money. Instead, many people who have taken positions in the case of Euro CHF and waiting for such a long time. So they lose the patience when they see that it is simply consolidating with 3 pips, 4 pips spread, Euro CHF. And so they desert such pairs and just liquidate it and go to some other currency thinking that this is very active. And Euro CHF has come down drastically, so why not we buy Euro GBP? Then the players will rig Euro CHF in a very big way, or GBP CHF in a very big way on the upside, keeping Euro GBP around range bound conditions. So this is the way they handle it. So we need to identify and try to take positions accordingly. Then Shan, what is your view on Euro Australian dollar? It is always slow moving, and also with Euro sliding and Australia rising. See, Euro Australian dollar, Euro is making 41 pips negative net change. Australian dollar is making about 59 pips negative net change. So more negative net change in the case of Australian dollar. So the denominator currency is weak slightly than that of the numerator currency. As a result, Euro Australian dollar is expected to go up. Now, Euro Australian dollar. So it has gained about 24 pips. Then afterwards, they'll start gaining the levels in the case of Euro, then it will come down. So always relate the numerator and the denominator, their quick changes from that of the previous day close, and find out what they intend to do. So now when they reverse the market, what they have to do is the currency which is making the lesser negative net change has to reverse first. So Euro has to reverse first, then followed by that GBP, followed by that Australian dollar, if at all they wanted to reverse. Hope you are able to understand. So in that sequence they will do it. At that time, Euro Australian dollar, they will just make for the gain and then start making the drop. An upward stop and drop. There is a normal strategy they do. Then shares. Do you expect Greece to exit Euro? I don't think so, sir. Because there are so many such views they try to create. It is all speculations and probably derived it could be. But still, and not much of a drastic changes are bound to happen in the market. So when Euro GBP came to 0.98, they said that Euro and GBP could be merged, and a lot of negotiations are going on. That is how they just said, and nothing happened, sir. Because what is speculated need not happen in the actual governments. See, when Eurozone is willing to help Greece and Spain and other countries, so where is the question of just deserting the currency? By going alone, they might find it extremely difficult in competitive market nowadays. So without the help of others, it's extremely difficult to sustain. Then Tony, have you had your half-yearly forecast review yet? No, I have not done the review. You know that actually I was expecting a good rise in the case of Euro, which has dropped. So I know that the market has not moved in tandem with that of the expectations of the forecast. But coming to that of Australian dollar and GBP has nominally gained, but Australian dollar has gained. So certain currencies have failed and certain currencies have moved in tandem with it as the expectations. Like Euro GBP, I was expecting from 0.88 to 0.77 area that has come true. So similarly, you find CHF has come closer to that of parity. So there are certain currencies which have moved in tandem with that of the expectations. Other currencies have moved against the expectations. So it is a mixed reaction. I am willing to accept that my forecast has gone wrong. So it is not that in an egoistic way I am not willing to accept that the forecast has gone wrong and things like that. As far as Euro is concerned, the forecast has gone wrong. USD yen, which was expected to go to 80, 83 area, but is still consolidating around 78, 79, 80. And for that matter, many of the people thought that there could be moves in the case of USD yen in this year, but still nothing has happened in USD yen. So we won't be, these are all nothing but the forecast. And so we won't be knowing the insider story. So forecast is a forecast which has got the limitations. But CHF, which was expected to go up, has gone up, and Canadian dollar is also expected to go up, which has also gone above parity. Australian dollar is also expected to go up, which has gone. So some currencies have moved in tandem with that of the forecast. Certain other currencies have not, especially Euro, USD yen, and GBP. So that is what the forecast is. So I do not want to simply waste a webinar for that. And if you ask the questions, I'm willing to share my views with regard to the forecast, but still forecast is a forecast, and you can always keep in mind that the forecast can go wrong. Then Scotty. When euro breach 1.33, see the way in which they are making the downward move, and very quickly they are expected to make an upward move, and it is a question of time. So you know that what is next to impossible might become possible in a market. That's what most of the times we come across. So you know that after reaching 0.78, and nobody thought that euro will go to 1.60 from 2001, 2000 to 6, 7, 8. They took euro to 1.60 from 0.77. So people thought that euro does not have the strength to go up, because after the introduction of 1.47, it came down 50%. So nobody thought that it will go up, but it went up beyond the expectations. Now this is the election year, in US presidential election, and there are a lot of negotiations and things like that, which is beyond the purview of this particular webinar and the discussions, open public discussions. And so the players need to ascertain that they will be safeguarded so that they can start rigging the market. At any time, they will not take a chance, and they will always make decisive moves in the market. And during the election times, they sometimes lighten all their positions and try to see that the next government is supporting them, for them to make the riggings in the market. And for that, high-level negotiations are bound to happen. Then Carlos. Would it be fair to assume that this bullish bearish sentiment will stay in the market until October, November, and then we should expect a risk appetite? Yes, that could be a possibility, and because they have to get the signals from that of both the parties that they will be safeguarded. See, ultimately everybody is working more money. See, the governments might have several policies, and the parties might have several policies, but if you take into consideration the individuals, they all work for money, nothing more than that. Keep aside the policies. So once the players develop an understanding with the individuals, the prospects, then they will start making the rigging in the market. Okay, I'll give the forecast expected market moves for this particular week using the slide. I'll go back to the other slide. Okay, today is 23rd of July. So a dip already happened, and firming up is expected during the late Japanese session, and swing and rise is expected during European session. Again, a dip or a drop could happen during US session, and then quick rise they could do it, because they cannot continuously drop the market, and then traders will desert the market. So they have to make either way moves, only then the traders will participate and earn and lose. Alternatively, that the players might be able to earn money. So they are not sentimentally against any currency pairs. The players try to make big moves in currencies wherein the traders have taken positions, so that the players can earn money from that. The level, and during gap times and things like that, when people are asleep and people are not participating in the market, they could try to drop and then start gaining the levels. That sort of moves they are expected to make. So unless and otherwise you take a sell and speculate, keep a hedge order and try to close it, the next day drop, it is not possible to earn money in a sell and buy trade. So they create a situation of that nature, so that the traders have to forcibly hold the positions. So when they forcibly hold the positions without a stop at entry, then they will try to play the trick. On Friday, they are expected to gain, but again 30th and 31st, they are expected to bring in a very quick upward move and then start making the drop on 1st of August and then start making the reversal on the upside. But still, the reversal is expected to happen this month end, but still we have to keep our fingers crossed because they have been dragging the market from January till July. So how long they are going to drag the market, we have to wait and see. Because they have their informations which are more authentic than that of the forecast. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. And I'll come again on Thursday, 26th July, and give yet another session of Asian session live market analysis, review the market, and see whether the market has moved in tandem with that of the forecast or against, and also try to see how far the trading strategies have helped us. So I'll give more focus on the trading strategies during this sort of month end and new month beginning times. So wish you happy trading and try to see that you have got a reduced fear with regard to market so that you will be able to think of good trading opportunities. Wait for the good trading opportunities and try to take positions rather than trying to take the position and wait for the market to move in your expectations. That way you will be able to do quick trades and still earn money irrespective of the market condition. Thank you all and all.